Hello, everyone. Hope you had a green and profitable trading week. Let's go ahead and just jump into the dollar. As expected last week, we went up and touched the upper part of the 90, or sorry, the middle of the 97s to around a 97.30 ish area. Pushed up higher than that towards the latter part of the week. Kind of surprising. Um, but again, I guess there's a little bit more fuel left in that fire. Now looking a little bit up towards those 97.55s, and in fact, looking at the 4-hour time frame view, just to kind of give you a little bit more detail, we're looking at 97.50 to about 55-ish area, maybe 57, and then we should get that reversal back down around 96.90, pop up to 97.10. We fail there, then we should be in business for a break and reversal down to around 96.23. So let's go ahead and move forward here. Take a look at gold. And again, gold hasn't really done too much. It's just been pretty much putting in a bottom and then ranging a little bit here, aka consolidating. I don't really think that much is going to change in the near term. We're pretty much in a range from about 1565 down to about the 1537 area. I think that we're pretty much going to see that tighten up into the 1547 area and maybe even a little bit higher this upcoming week to around those 1551s. And again, from there, we should be looking at another retest of around the 1565 to around 1567. The big thing here is that I'm looking for, and I'll just kind of show you with my fibs, is essentially the big move is going to be once we can kind of hold on to the 1565 area. 1565, from there we consolidate, we move up, we have a nice clear indication 1575 and then up into the 1582s. But again, going to need to see a little bit more consolidation. I think we're going to be kind of range bound for some time until we see the dollar put in its highs, dollar yen, make a decision if it wants to go up, if it wants to correct, or if it's just going to range sideways. Then again, we'll range sideways as well until some kind of trigger event either takes us down to revisit the lows here at 1537, or something breaks us out of this range up above the 1565 level. So till then, I'm saying we're going to be looking at some consolidation here. You can see that we had some lower lows, lower highs being put in, and then on Thursday, Friday-ish, it broke that trend, got outside of the downward pressure, and started consolidating a little bit higher. So once again, it's around that 1554 area down to, you could even afford to go a little bit lower around 1551, 1550, and start consolidating there. So until we break out of that range, either one way or the other, again, I don't think we'll be going much lower at this point. If we break 1536, just to put it out there, looking at 1520 to 1519, again, I kind of don't see that happening at this point in time. We're kind of consolidating pretty strongly. And in fact, let me just go ahead and get rid of this. I'll jump out to the weekly for everybody just to kind of show you what I'm looking at here. So, again, the past 2 weeks, after a big move like this and a big reversal, I was looking at, as you can see here, around maybe dipping back in the 1505s, but mostly the 1519, 1520 area was the more higher probability, if I had to give it one, level of downward pullback. Didn't happen. So far, it's been clinging to relatively where we were previously back in August, near the recent highs. So again, that is pretty strong. It is going to take a little bit of time to break out of this or consolidate enough to be able to break out of this to the upside for the upside continuation. And yes, I do believe we'll be seeing an upside continuation over the next few weeks or so, months, and so on and so forth, because well, if you haven't been reading any articles, then I can't help you there. So that's just where I'm getting my background from. What I'm seeing in the indices overall, just everything looks like a total disaster in my opinion. So that's why we're seeing such strong demand for safe haven metals such as gold and silver. And for silver, again, I'll put it out there, keep an eye on that 1815 level for the futures contract. That is a crucial level. Once you see that 1815 being maintained, then we'll see gold get that support as well, and that's probably when we'll see that break over the 1565. Now, as far as crude oil is concerned, kind of a it's in an area that I absolutely despise to try to find a trade. So I'm just going to go ahead and keep it as simple as possible. Um, it's essentially in a range. Okay. It's like in a range where it's got to do something, otherwise I have no interest in it. That's basically the way I'm personally treating it. It's what I've told my members. Just until it does something of substance, leave it alone. Because right now it's kind of in that area where you can get stopped out repeatedly, and it's difficult to really gauge what's going to happen first. Either we go ahead and try again for the 59 break, which again has proven very, very tough level. It's not to say that we can't, but above it we have again resistance around the 59.30 up and around 59.50s. It's essentially a wall for right now. We need a trigger event to get us over that level. Conversely, if we do continue to fail at the 59 level, then we'll be looking at a retest of those 57.60s again, and a break from there will again send us lower to the next part of the range, which is around 57 to 57.05. So essentially, that's the area we're going to be kind of shaking around in, trying to figure out a direction. So until we have an indication, I would say watch the range. If you break above, then obviously we're looking for upside move. Then we can start talking about 60-50, 60-60s. If you break below, the midpoint here, which is around the 58.45, then we'll be revisiting at least the 57.60s. Break below, lower than that. 57 to the downside, 57.05 ish should hold in the interim. And again, try to revisit these 57.60s to upwards of 58.40s. So again, it's kind of in that area where I just absolutely despise having to try to figure out what's happening. And again, if you look at the weekly time frame, you have a few different arguments that you can make. So, looking at the downward trend, the trend line, we broke out. It looks like a fake break at this point. We had a pretty large move up on that Iran situation. Price pummeled back down again. Everybody's kind of looking at each other. What do you think? What are we focusing on this week? The trade deal came out, wasn't much of an impact. In fact, it looked like a liquidation event. People were selling into it. So again, until it breaks the range, either play the range as best as you can, which you can do if you want. Personally, I like to catch those bigger moves where I can control my risk and reward a lot better, so I'll be looking elsewhere. If she happens to break below, like I said, 57.38ish, looks like the weekly low was here, then we'll be looking again for 57. If 57 breaks, then we have a pretty big fall back into around 55.7, no, 55.60, excuse me. So again, range bound action, keep an eye on those important levels in the range and the extremities of those ranges, and then either you'll have your guide upside or you'll have your guide downside. Till then, it's going to be kind of choppy in here. We've seen this kind of action before, and it does get ugly. It can lead to a lot of stop outs, and so trader discretion is advised. In other words, do your best you can, either avoid it or play the game. Your call. There's always somewhere else to play where the situation might be a little bit better. Now, finally, natural gas. Some of you reached out and said, nice call on that. Good job. I doubted it. Blah blah. I'm not here for the kudos, honestly, people. I do appreciate that. It's nice to be right. It's good to see what's happening behind the scenes. There were some articles that came out kind of explaining the disaster within the actual sector of producing natural gas and bringing natural gas to market. And I was surprised to actually read that. It's so cost inefficient as far as making a profit that a lot of companies have actually just started burning natural gas instead of even trying to sell it, because the cost to get it to market is just not even a profitable extinguishment of the supply that they have. So right now, until we have a little bit of a consolidation within natural gas at lower levels, which is going to obviously cause some shutdowns, and that'll cause a squeeze on supply. The whole thing. Anybody that's in business, you shut down the supply, the demand stays constant. Eventually, you have again another upside push in prices as demand resurfaces again, and then they start bringing on the rigs back online, and then you have that same type of a story. So, as I pointed out, probably about 2 years ago, year and a half, 2 years ago, I can't remember exactly. If anybody wants to look in the archives, they're there, in my playlists, and you can try to find it if you want. But in essence, looking back in time, what I said was that the average real price of natural gas was basically fairly priced and valued at around the lower one level to around the 150 level. So that's basically where we spent a lot of the time. And here you have a lot of extreme outlier price action. And we saw a similar type of a maneuver here. And then, that's basically what happens. Natural gas has these types of, they have these one-time rallies, or this is a monthly candle, so you had a couple months rally, probably due to, again, a similar type of atmosphere like we're in now, where you have the consolidation of the sector, just the production of it, and then you have, the operators shutting down, supply stays relatively constant initially, and then starts diminishing. Then you have the demand kick in, so price adjusts, and when price adjusts to the upside, again, you have your competitors coming back online with their rigs, and essentially the process starts again. So you have your consolidation, you have your pops, you have your consolidation, you have your pops, and the same old story continues throughout time with natural gas. It shouldn't really be a shocker that we are back down here near two. Where are we going from here is what I hear some of you saying. Okay, so weekly close was terrible, right? Below the 203 level, not much of a double bottom bounce. It bounced a little bit, nothing impressive by my standards. So still believe that we're going to be seeing around the 190 level. We do have some nice wicks back here to kind of use this as our guides. But don't be surprised if you see little to no bounce off the 190 level. It looks like we're going to see an outright move down to like the 170 160 area, and the lows here were around 163 165. From that point, you should get some level of double bottom bounce. You'll probably be looking at around 180 to 185, maybe 190s. It's possible to see a retest of the twos. Again, it probably will be a short-lived experience, so make sure you take profits. And if you're in a long position and you're heavily underwater, um, it's another lesson learned. You got to use those stops, folks. It's just the way you become a good trader is you just have to have a number one, a solid system or strategy to get in and out. Secondly, you have to have a very good risk management system so that if you're in a trade, you know what to do. Either you maintain the stop loss. First off, have a stop loss. Don't trade without one. Having them too wide, if you do some Google searches, some YouTube videos on how to set a proper stop loss, you'll see that it ranges from keeping them tight to keeping them wide because of stop loss hunting. It doesn't matter. If you keep the risk reward ratio at a certain point, you risk $100 to make two, 2 to 1, 3 to 1, 4 to 1, 5 to 1. The higher, the less you have to risk in order to make the most is your preferred ratio. This shouldn't be any type of rocket science. It's just simple math. You get stopped out once, it's $100. If your average return is usually, a 2 or 3 to 1, then on the next trade you make, a profit, you're back to break even or you're up a little bit, so on and so forth. That's why I said personally a little while ago, I shared this with some of you in one of my videos. I'm pretty sure I did at least that. When I go in, I try to set it up. When I'm trading like the S&P, no more than like 1 or 2 point stops. After that, I just let her go. Next critical level, I pay attention. I get back in. I put my stop loss in. She goes green by 2 points. I raise my stop loss break even, one tick profit sometimes, and then as she continues to climb, I'll raise it up a little bit to guarantee myself until she gets to my target, and then I start focusing on the next setups, or even when I'm in the trade and it's going, I just start looking at the next setup. So it's got to be systematic, folks. And I know, I hope I answered everybody's question about what's happening with natural gas here. If not, obviously you can leave a comment at the bottom of the video or reach out to me directly via Gmail if you like, thetradersperspective@gmail.com. If you don't feel like leaving a public comment, that might be open to some kind of feedback by other subscribers. Don't fear any of that stuff. It's perfectly normal to have questions. No, and again, nobody is perfect. I was having a conversation with somebody today that was asking when I was going to put the video out, and he said it went through some time, some rough learning lessons. Everybody goes through lessons. Nobody gets into this business that survives and has never, blown an account up or lost a significant amount of money at some point in time. The key is that if you're, number one, if you're new to this business, the first thing I would say is stop. First thing you want to do is you want to read, you want to get educated, you want to look at different strategies, you want to kind of play around, do some paper trading. I heavily, heavily, heavily urge you to not risk any real money, because even when you do, when you think that you have things locked down or locked up, you're still going to end up losing money. So the key is to lose as little as possible until you get over that hump and you start seeing the little tweaks that you need to make within your strategy where things make sense to you, and then you can start building off of that experience. But you got to do it intelligently. You got to stay strategic across the way. This is a business. As much as everybody likes to say, "Oh, well, trading is like gambling," I disagree. It's about taking calculated and probability based trade setups. Now, if you're in here, scalping there, you're making a lot of assumptions that this interim level will hold or this interim, it can go all over the place. But people that are doing these scalping trades, they also have very strong and tight risk management metrics in place. So you might see a YouTube video where somebody says, oh, well, this person does this and this person does this. Half to one doesn't even tell you where their stop loss is at, or even if they have one. The good, really, really good traders that are out there, they're not even on YouTube, telling you how many, I risked 400 contracts on gold and I took two on crude and this and that. These guys are out there. These ladies are out there. These people, to be as equal as possible, these people are out there and they're doing these things. Am I up to that level? Working my way up to that level. But that's this whole thing about YouTube is not about me. This is just about my vision of what I'm seeing for the few things that I put out to the public for free. How long will I have my own side business with thetradersperspective.com? I don't know until it becomes a hindrance on my overall personal trades, which doesn't seem to be the case. So I don't have any reason for shutting it down. I don't do any advertising because I don't care if I have people come and see value in what I have to say. It's not, I'm not here for the ego trip. I'm not here for the pat on the back. I'm just here to share some knowledge and an outlook that maybe somebody else will not be showing you, that maybe you needed to hear or maybe needed to see. Because I know personally that there were very, very few people that saw that we were going to go to low twos or even sub two within a decade. I know that there's one guy on Twitter, at least one guy that I know of, and I only know this because another trader actually said it to me, another veteran that's been in the game for a while, said that I was only one of two people that he personally knew, and this guy has got some vision, so he sees what's out there. One of only two people that had the price going down to these levels, for natural gas specifically at this point. Now, it's nice to be in good company because that person has, I think, 30, 40 years trading experience, and that's older than I am. So it's nice to be in that good company. I still have a bright future ahead of me. And just like all of you, you have a bright future ahead of yourselves as well. Listen to my words very carefully. Have a strategy and use a very tight risk management system. That's not saying use extremely tight stops. I'm just saying make sure that if you're getting in a trade and risking $100, your return or your profit, in other words, better be at least a 2-to-1 ratio. At least 2.5 or better to 1 is always the better deal to take. Like I said earlier, risk less to make much, much more. That's the name of the game. It's all based on math. It's all based on what you're seeing and where you enter. It's all about patience and maintaining, I shouldn't say monitor, maintaining emotions, keeping them out of the marketplace. They don't belong here. You get into a good trade, you put your stop loss in, you put your take profit part in, and then you just, I don't know, go walk the dog, go do the dishes, run to the store, get your oil changed, whatever it is. Anything to keep you away from going, oh, the price is doing this, oh, the price is doing that. The bottom line is that if you are in the trade, you carry yourself through that trade. Price gets above, let's say, for my person, like just what I do, price gets above, let's say we get in at 224 to 221 or whatever it is, this line, 221.6. Price goes up to 23. I'm taking my stop loss, moving it from, like, let's say, 2159 and bringing it up to like a tick or two profit and letting the trade just continue to run up to the target. Let's say in this case it was up to 2.522. That's a risk-free trade, folks. Worst case scenario, she reverses, takes me out, and I still make some money. I didn't sit there, waste my life away watching this, all day long. That's just the name of the game. So, enough of my rambling. I hope you all have a wonderful and profitable trading week. It's going to be a short trading week overall. We have Martin Luther King Day tomorrow. So, again, just listen to my words. Go ahead and go out there and see what else is out there on YouTube as far as people talking about, stop losses and how they treat them. You'll see that everybody's got a different opinion. But the one thing that you have to make sure is that if you're watching these videos and you're seeing these traders, and some of them may not even mention their stop loss ratio. Take a look at it. Pause the video and look. Okay, well, their stop loss is, 2.558. they got in, 2.9. I mean, this is just obviously just a straight example. But if they're using a wide stop loss in their profit, like let's say that, like I said, they got in at 2904 and their target's 3 and their stop loss is down here, that's a reverse ratio. They're risking way more than they're even going to make profit. So, again, if anybody has any questions about anything I rambled on or any of my analysis, I'd be more than welcome to entertain the conversation. Again, I hope you all have a wonderful and profitable trading week. Stay well and protect yourselves.